For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. we have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 populations live with some kind of disabilities. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this program.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I'm Possible, where we managed to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients and their family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. You join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Hello everybody. Welcome to today's webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Understanding the Basics of Construction Sector. My name is Shen Chu. I'm the moderator for this webinar. Now, how many of you find that the construction sector is really hard for you to grasp? Okay, if you are like me, okay, type 1, okay, in the chat box and let me know. If you really find construction sector not easy for you to understand, right? The construction sector is very vital to the economy. It encompasses a wide range of activities such as property development, infrastructure development. And today we are going to go through the essential of construction sector, so you know how do you dissect this industry so that you can make informed investment decisions when it comes to investing in this industry. Now, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He first indulged himself in the SME financing industry after finishing his diploma in finance and investment in Tak University College. He was formerly the Risk and Compliance Officer with Rakuten Trade and also a dealer representative with TA Securities. To date, he has just passed a 7 years mark in the capital market as an investor himself, where he also had the opportunity to run the financial blog One to Invest with over 60,000 followers since 2019. He had hosted close to 50 interviews with public listed companies in Bursa Malaysia, as well as NASDAQ, and had been featured on Xinju, Nanyang, China Press, D Plus FM, and Caijing. Currently, he is also a SGX Academy speaker. So he's none other than Mr. Max Tan. So Max, how are you today?
Hi Shane, hi everyone. I'm good. Hope very nice to see you guys tonight, and I hope the session will be fun for everyone here. So how are you doing, Shane?
Yeah, I'm fine as well. So without further ado, let's learn from you, and I will stop sharing my screen.
Thank you. So one moment, guys. Let me quickly share my screen for a bit. Okay. Okay. Good evening, ladies and gentlemen, and the fellow investors here, and welcome to our sharing session tonight with the topic of understanding the basics of the construction sector. So once again, thank you, Shane, and everyone here for having me today. And I sincerely hope that the session today will be helpful for all of you throughout your investment journey, right? But before we really begin, I think it's very important that I make, again, another disclaimer to clarify on the contents that will be shared today. Firstly, personally, I do not carry any CMSRL license to provide you any investment advice. And please be informed, all the information shared today is only for educational and study purposes only, and it should not constitute as any form of buy, sell, hold recommendation, especially when we talk about some of the specific companies later on. I know some of you are excited about the recent share price performance of some of the construction companies. So if we do extend our conversation to that part, please be informed, there will be no recommendation on buy, sell, and hold, right? And if you really need such advice, I would strongly recommend you to engage a professional or licensed person to do so. So with that, hopefully everyone understands, and we can kickstart our session today, right? So speaking of the construction sector, and I'm sure some of you had already experienced the recent uptick effect of the construction and also property market as well, especially after the state election. But I think construction sector is really more than just, you know, a tool for you to, or for us, for traders to just trade after certain political stance has been made or certain news has been published. It's not just around rally, but essentially, construction industry is really one of the key pillars that supports the economy of Malaysia. And I think it's crucial for each and every one of us to at least understand the basics of the industry. I'll try to share as many as I can today. I'll leave more time for the Q&A and for everyone to really capture any form of opportunities that may come in the future. Okay, so to begin with, let's talk a little bit about what the construction sector really means to us, especially as Malaysians. So back in 2022, you know, the construction sector actually has contributed approximately 121.89 billion, if not mistaken, in terms of the value of work done in Malaysia. Now, I don't know whether this number would sound a lot to everyone here, but we need to look deeper into the spillover effect of the industry. So 121.89 billion Okay, so what's the economic impact to the whole Malaysia? When we talk about the construction industry, naturally we would think of the need of building materials. So in this case, we're thinking about steel bars, concrete, aluminum frames, glass, timber, and all kinds of other materials. So once a construction project were to begin, it would immediately bring the demand into the deeper part of the value chain. So some of the things that commodities that we mentioned just now, or some of the products we mentioned just now, it will also benefit into the deeper part of the value chain, mining, metallurgy, processing plant, and some of the manufacturing houses. This is on the very earlier part of the phases, right? And of course, let's not forget about the logistics, the storage industry that is also involved in the spillover effect. I can say that whatever we mentioned just now is at the procurement, which is the purchasing of the raw material part of the sector. Now, imagine a construction site where the land has been cleared, meaning that you could imagine a plot of land used to have a lot of trees, and then the landscape obviously is not flat. Now, the construction site has been cleared, and you would need other services as well, such as sanitary to clean up the place. And of course, for your employees, just an example, for the workers there, catering business, all these services industry, they will be involved as well. So this is a small part of the spillover effect onto the economy. And if you have been trading in Bursa for quite some time, I'm sure you will understand that construction industry, they are in demand of cash, basically. So that would also, when a project were to launch, it will also benefit in terms of the credit, the financing services industry as well. So we'll talk a bit about the cost of financing impact onto the construction companies and how does it actually happen and what would happen if a company had too much gearing on them. We'll talk a bit about that later on. But for now, you get the rough idea of it. So the implementation of a specific project, especially now everyone is excited about mega infrastructure, right? So these projects would create really big impact onto the economy itself, right? So next up, we're going to talk a bit about job creation. Yes, in the construction industry, we do take in really a lot of foreign laborers. So I believe we have all heard of the labor shortage incident back in 2020, 2021. So the MCO times where there's a freeze in terms of the engagement of foreign laborers. So basically, at that point of time, a lot of construction companies, they couldn't bring in workforce into Malaysia, aka foreign labor. So at that time, a lot of projects, they were delayed. So imagine a spillover effect. When there's a delay, there's a stock up in terms of the inventories. So they lower the demand over there. So basically the whole economy got impacted as well, right? So when we come back to where construction projects are being implemented, so basically it would mean that more jobs are being created. So the spending power at the time has also been increased generally. So when we talk about spending power, there is a lack of spending power. I don't know if you guys feel it, but when you go to shopping mall, generally people are just window shopping for now. There are lesser, normally this is how topic a bit, but normally how would I assess whether people are really buying is that you see whether they're carrying bags around or they're just walking around. Although there are huge number in the malls, but not a lot of people are actually buying. So the spending power, especially into the retail industry, is also generally weaker now. But hopefully it will be recovering soon. And of course, the spending power, again, is going back to the economy, so so and so forth, right? And also, I think it's important to also mention that for those who trade in US or to those who monitor the US market, unemployment rate, where we're talking about job creation, right? Unemployment rate actually reflects how the financial or the political stability of a country. So previously, we talked about some very fundamental factors on how launch of a project, how would it impact the fundamental factors of an economy. But as some of you may have been made aware, so foreign investment, be it FDI or the fund flows into the stock market, it would be impacted by the political stability of a country, which unemployment rate could be one of the yardstick for this kind of measurement. So there you go, a very brief view of how significant is the construction industry to the economy, right? So next one, infrastructure development. Now, infrastructure is basically I think backbone would be a very great word to represent infrastructure development. So without infrastructure development, like bridges, like the transport industry, so basically our economy couldn't really function efficiently, right? So it's important for the infrastructure subsector to spur the spillover effect throughout the whole economy, like what we just mentioned just now, right? So with that, I hope everyone get a rough idea how important is construction industry. It's not just something that we trade, but it's also vital, to say the least, to our economy. So let's talk a bit about the sector outlook instead. Okay. About the market outlook of the construction and infrastructure industry in Malaysia, basically, in terms of construction work done in Malaysia, the total size, as we mentioned just now, 121.89 billion back in 2022, and you might have already made aware that this has actually suffered a downturn as compared to the 146.37 billion that is in 2019, right? So why is there a significant drop? It's quite significant, 20-something, 25 billion plus minus. Why is that such a significant drop? So in 2020, 2021, it's COVID-19 that impacted the whole implementation or the whole working outlook of the construction industry. So overall, it got impacted, right? So I think it's quite normal that we see a lower number in 2022. So I plugged some statistics from a recent prospectus that it's related to the construction industry. That's the latest one that I can see. So here's what I found. So economy and fiscal outlook and the federal government revenue estimates that 2023 published by MOF back in 2023, the construction growth is expected to experience a 6.10% increase in 2023. Hopefully that will be real. So coupled with the recent excitement in the, especially in the Johor part of things. So hopefully that will materialize and we will see more excitement coming into the construction industry. So where does the 6.10% increase coming from? It will include the civil engineering, residential buildings, non-residential like hospital. Perhaps we are talking about the some warehouses, so some schools, some universities, and of course, last but not least, the mega infrastructure projects, ECRL, T3, and 5G cellular network rollout. Okay, that was also included in it as well. So I know everyone here might be, if you're traded recently, so definitely you'll be excited about the the price running with a few stock running very strongly, company name with I and E, but I might not be able to comment on them individually because what is rumor, I think it stays rumor. And what I can only say is that rumors, they would spike the share price, but normally when the news really came out, when it materialized, normally the share price would, there will be profit-taking activities. So you're trading actively, be really careful and make sure your trading strategy is in place. So if you have time by the end of the session, we really discuss a bit about the trading strategy instead, right? But I think on a very broad-based sense, construction companies with infrastructure exposure is definitely looking to be benefited from the newer projects, right? I think HSR is also one of the interesting ones. Continuation of the Pan Borneo is also one. And interestingly, without the newer projects coming in, the statistics that we have in Q2 2023 has already seen an 8.1% increase on year-on-year basis in terms of the, again, value of work done as compared to a year before, according to the OSM. So yeah, we're definitely looking at a better outlook in 2023 now, right? So I think this is just a very quick snippet on, there is a unity that hopefully all of us would work together to refocus back into the economy. This is just a very quick snippet. Okay, so I think we just talked a bit about the prospects of the construction sector, but I think we can look into some of the specific growth drivers of the construction industry, right? We talk about infrastructure investment and I think one of the big thing in the market is ESG. ESG has been becoming a crucial part of investing in equity. If you look at local market, EPF easily one of the largest investors in our country as well. to have a fully ESG compliant portfolio by 2030. So imagine that when other funds, they have the idea that EPF, they're only going to invest in ESG compliant companies. So what would the other smaller funds do? They will follow suit. So ESG compliant portfolio, I think it's already quite famous overseas. So if you want a foreign investor to come into the counter that you're investing, so be sure to make sure that your company or the stock you invested in is ESG compliant. But to be honest, ESG compliant in terms of construction industry is not that easy, especially when we know that there are a lot of what we call moving parts in the construction sector. So it's not really easy for any construction company to prove themselves being so-called ESG compliant. Okay, but if you are talking about what we are seeing here, the green building initiatives, for example, eco-friendly construction methods such as the use of raw materials that have the can be reused. For example, bamboo is one of them. I think it's greatly used in other Asian countries, but not us. Recycled steel and some of the buildings that have installed energy efficient system or solar panels, green roofs, and living walls. So living walls are basically vegetation onto walls. So some of you, when you pass by the city, you may see there are luscious growing onto the side of the wall on some of the residential or commercial buildings. So I would think that that's one example of living walls. Or the construction company, they are using technology such as IBS for prefabrication or modular fabrication on and off-site. So basically, coming from a layman, so what does IBS mean is that if I know that I need to have a precast structure of a toilet, I'll manufacture it somewhere first. And then when I'm in the building process, I'll put it in onto the building itself. So that speeds up my building, but of course it will result in cost increment. Okay, that's on and off-site IBS. On-site, initially you will need to fork out a certain area of space, right, for you to manufacture a product. Of course, they'll say the higher cost initially, but lower cost of transport afterwards, right? Transportation is also a big part of construction industry, especially when there are multiple sites. They need to mobilize their resources, for example, machineries from site A to site B, and also labor from site A to site B, etc. So offsite, as the name suggests, the IBS or the modular parts, they're coming from other parts, right? For example, you need to travel 10 kilometers away from the construction site. But imagine how heavy the prefabricated parts would be. So that's also a part of the cost. Of course, construction companies themselves, they would calculate the cost and also basically the risk and reward of having an on and off site. So that will also greatly having IBS actually reduce the risk onto the labors as well. So because you already have the prefabricated products, so it'll be quicker, so lower risk for the labors as well. So these are some of the initiatives that the construction company they could do. And for you to distinguish some of the companies that are considered winner, that they have the green building initiative in place. So when a company, they have fund support, and without some fund support, obviously the valuation will be much different. We'll talk a bit about that later on, right? And then talking about digitalization and technology, although we see lower exposure in Malaysia, building information modeling, BIM, it does help in the industry too. I don't know whether you guys have heard of the project River of Life, RL. The project is aimed of transforming the Klang River into a vibrant waterfront with high economic value. So basically, that's one of the example. You guys can have a look, can Google it up as well. So basically, BIM, it helps in designing, managing complex aspects like a water treatment facility, the landscaping, the transportation networks. So I know there's a lot of technical terms being thrown here. So when you go and study a company, we will also discuss on how to study a construction company later on. When you go and study a construction company, make sure when you go through the annual report, go through analyst report, or whatever material you got, look for some of the things that are more techy in sound. And also, of course, make sure they really implement that as well. They don't just talk, oh, we have BIM, we have IBS in place, but they don't really exercise that. Then they're only talking. So probably that's not going to really help them in terms of the ESG scoring when it really comes to what it matters, right? Okay, so with all this initiative and also new technology, so we are also likely to see more investment, be it local or foreign, into the industry itself, right? I think for FDI, foreign investment, or investment into the stocks itself, or some of the government policies, or especially on the infrastructure, I think we pretty much covered it previously, so we're not going to spend much time over here. But I forgot to mention something which is also important, that a nation or a country with political stability, normally they would have a premium in terms of their PE valuation over the companies. Now, on average basis, this is not on average basis from what I see personally, construction companies, unless they have some special competitive advantage or they have something special going on, normally their forward PE valuation would runs around 8 times to 10 times, right? So as we are going to more stable politically wise, so hopefully we would see PE enhancement in terms of the construction sector as a whole. So how does it work? For example, if you are buying a company with a PE of 10, construction company, without the company having a growth in terms of their earnings, let's say there's a 10% increase in PE valuation because the country political policies are in place, everything is stable. Naturally, when PE from 10 go to 11%, your share price has already gone up by 10%. So you see how the PE valuation factor actually affects your investment as well, right? But with all these positive parts being mentioned, I think I also need to remind everyone that minimum wages, recently the increase of minimum wages does have a very, I think it would be a substantial increase in terms of cost, especially for those who have a lot of labor. The increase of minimum wages really does impact the construction industry as a whole, as some of the pass-on costs and also new projects that they are going for. And I think this is something that we need to wait for it to sunk into the accounts, and it's something that we cannot avoid at all, right? So this is another snippet, and we already mentioned some of the things over here. What I missed out is probably the Klang Valley Double Track KVDT Phase 2 and LT3 ECRL 5G infrastructure development. These are the things that has been running that hopefully, fingers crossed, will be contributing positively into the construction industry, especially in 2023. I think we are left with Q3 ending and also Q4. So hopefully 2024 things will be even brighter, right? Now, if you go through the registration page, I think we have a quite controversial discussion where is construction industry a cyclical industry? Yes or no? If you think it is a cyclical industry, you can comment on 1. And if you think it is indeed not a cyclical industry, you may comment on 2. Now, there are no right or wrong answer. I'll explain later a bit why. It's important that we have a deeper understanding on why there's a perception on it's cyclical and why it is not. Okay, so we move into the next slide. Okay, now sorry, I think some of you have already commented whether it's a cyclical or non-cyclical. But generally speaking, the construction industry indeed it is quite cyclical, but with a twist. Let me explain that later. So why it is cyclical? First, we talk about why it is cyclical, why the market perceive or understand it as a cyclical. So one of the obvious one would be when there's economic growth or when there's economic recession. So these periods of time, economic growth, economic recession, we talk about economic growth first. Economic growth, we will easily see increased demand for residential, commercial, of course, infrastructure projects, and vice versa. When there's a recession, of course, there will be a decrease in demand. Everybody want to keep cash. Everybody want to be more conservative, right? And where there is a economic downturn, construction activities, they would decline. Everyone are more conservative. So, but now, interestingly, we are seeing a slight contradicting situation on residential side, which is the place you and I live, right? Our home. There is indeed a slowdown in terms of demand. I talked to a couple of property agents recently. The sales in July and August specifically is a bit slowing down. So if you have property counter, you might have to, be more aware on that. So why is that happening? Is probably because of the spending power, overall economic outlook, right? There's a slowdown in terms of residential coming from the seller, which are the property agents. If you're a property agent, feel free to comment what you're feeling now. Are your sales good? Are your sales not good at the moment? Feel free to, discuss. But for non-residential, interestingly, especially for industrial use properties, we're talking about warehouse, we're talking about industrial buildings, the overhang data is quite low and the demand is still strong, especially on warehouses. And as we mentioned just now, infrastructure projects are still being continuously rolled out. So, and a broad-based basis, again, the whole construction industry together. I have a discussion with a construction company, one of the management of the construction company. What they mentioned is the prices of raw material, as we mentioned just now, the steel bars, the glass, the aluminiums, they actually been normalizing. But some of the contracts that they receive are still based on the higher price of the raw materials. So you can you see there's a margin, additional margin for that. Speaking of raw material, apart from cement, actually I think cement is still on, I wouldn't say increasing, it increased and then it remains staying on a higher level for now, right? But it wouldn't affect the overall cost structure for the construction companies, right? Cement is one part of it, but it also depends on what the company actually does. For example, piling company, Bopal, they would require steel bar and also the cement to pour, to solidify the piling. And some of the companies, they're doing IBS, probably they would need the cement as well. But for companies more into project management, for M&E, probably they would not use so much cement. So really depends on the company itself. We will talk a bit about that also later on. And you could imagine that with raw material prices coming down, it's a bit contradicting. Demand is down, but raw material prices is also down. So it's a bit tricky now, okay? Now, let's talk a bit about also on the other factors. So some of the factors I already mentioned over here. Another factors that is important for investors to note is also the interest rate. And interest rate, I believe everyone knows, it plays a very critical role in the construction industry. So if I'm not mistaken, 7th of September, our OPR maintained at 3%. Generally speaking, it's a good news for the construction industry. But of course, it's not so good for the companies that are doing import. So because it might show a weaken, even weaker RM. So hopefully it won't go any lower. But anyway, interest rate maintained 3%. Generally speaking, it's good for the construction industry. Why? The interest rate itself, it could directly affect the home buyer sentiment, especially for residential. So think of this, imagine if interest rate is 5% now, OPR, when the banks are doing SBR plus their profit margin, your interest rate will be very high, let's say 7%. So you will think twice before you buy a house, as compared to 3%, obviously. And also, they will impact the margins, profit margin of the construction companies based on the level of gearing. So let's say if a company, they have a very high level of gearing, okay, they would be negatively impacted by the increase of the interest rate. So interest rate higher, the higher their financing cost, except their loans are in fixed interest rate basis. So how can you check whether a company has high gearing? I think easily you can check on their balance sheet, but how about whether they have a floating interest rate or fixed interest rate? Easily, you can also check that in their annual report. I think it's quite far away in the part of the annual report where not a lot of people will actually visit that part, but you can actually check the breakdowns of their loan. Which bank is it from? What is the interest like? Is it fixed or is it flexible terms, right? The higher portion of flexible, the higher chance it will get affected by an increasing interest rate, right? So I think generally speaking, we can conclude that the construction industry is cyclical in terms of sentiment and also share price. It's basically two same things. So why do I only mention sentiment and share price but not fundamental? Okay, we'll move that into the next slide. By the way, no one gonna comment the individual in the in my slide, which is quite an old photo. No one gonna comment on it. Okay, so why do I mention only sentiment and share price? You see, share price of a company, I think regardless of whatever market you're in, is always a representation of a perceived value of the masses. So in other words, when everyone think that a company is a good stock, everyone go and buy, it will increase in terms of share price. But the fundamental effect of the stock itself might not come into the picture so soon, or it might come immediately, or it will come later, right? So in this understanding, people tend to trade construction companies rather than holding them over the long term due to the higher fluctuation in terms of the share price. If you check on the beta of any construction companies, or if you compare to any other industry, except for cyclical industry, right? The commodities like the steel, the palm oil, those industry. If you compare it to FMCG, tech industry, tech is also cyclical in nature, just that the cycle is probably quite tricky to catch. It could be as long as 24 months, it could be 9 months. It depends on the inventory level. But that's another topic, okay? Generally speaking, construction sector is very, very sensitive to news itself. But the fundamental aspect may not, okay? It may not get affected so easily by the news or whatever factor, okay? So in Malaysia, we do have some of the companies that prove themselves by continuously winning new contracts and also expanding their business in the construction industry, okay? For example, let's talk about infrastructure project first, right? When some companies, they win big in infrastructure developments, which they already get a contract, but there is a slight twist in terms of political stance. Now, everyone is worried that the contract might get cancelled, which it does happen in Malaysia, but unless there's now that we are more stable in hopefully, fingers crossed, we are more stable. Normally, there would be no more changes when they win the large contract, right? But if you are really afraid of there's a more political instability, this is important when you trade construction stocks, then perhaps you can look into the companies that win private projects, right? Private projects, again, we talk about in, I think, a few slides to come, right? If you talk about the companies that are anti-cyclical in terms of fundamental basis, so they continuously win projects. Basically, their order book will continuously increase. Now, some of you here, they might concern about the raw material price, like I mentioned just now. Now that raw material prices has gone down, the margin is would increase. But what if there's a case where raw material prices increase again? Now, this is the tricky part again. You have to understand the contract, whether it's from private or it's from public. For public project, there's actually a initiative called Variation of Price, VOP, specifically for public projects. Basically, there's a certain threshold. Let's say a contractor receives a public infrastructure contract or a residential, let's say affordable house. The raw material prices actually increase a lot. Then the contractor can actually talk to the public sector, whoever party it is, can talk to them, hey, you know, raw material prices gone up a lot. Can we readjust the contract that we previously signed on? Yes, VOP can help on that. Okay, especially I think when it touches with low cost affordable housing, which is very important in Malaysia, especially for the young generation like us. I think we can all agree that this is very critical for the government to continuously push on to low cost and also affordable housing, right? They're continuously lowering out government housing initiatives. So for companies that are able to get this kind of contract, normally they could keep the contract, and for investor, we could predict a more stable income stream. So we can have a better prediction in terms of how much the company would earn in the near future, okay? And I think as for commercial and industrial building, as I mentioned just now, really the industry is still looking strong, especially for warehouses. Okay, hopefully it could maintain, but I think there are specifically area, Penang demand is still very strong, but in some industrial area, there are more projects coming out, and I compare the prices as compared to 3 or 4 years before, I think that's a 20 to 30% increase, but that's on one specific area. I think warehouses, if you are in the industry, you can comment as well whether it's still strong. This is what we observe in the market so far. Okay, so now we're going into more micro level. We talk about the landscape of the construction industry. So in Malaysia, for now, at the moment, we had approximately 50 construction companies that are listed on the main board, and around 11 of them on the ACE board. So when we talk about construction company, we are excluding the EPCC player. EPCC, like SolarWest, Samadan, they are being classified as industrial products, right? So the construction companies that we mentioned just now, they are usually involved in the construction of residential building, and maybe a mix in terms of involvement in commercial projects and also infrastructure projects. So far, is there any pure play commercial and industrial construction company in Malaysia? I don't think there is a pure play one so far based on my observation. Normally there will be a mix. Let's say if I have residential projects, sometimes I also do school projects, or maybe I build police station as well, right? I think for the industry itself, let's talk about infrastructure first. Due to the sheer size of infrastructure projects, on paper, their margins tend to be lower. But I think for residential, it's a very interesting playing field. So for example, I'm going to quote some companies here, but again, there are no buy and sell call. These are case studies only. Companies like Southern Score SSBA, it's involved in someone like a project management company. If you could check on their annual report, I think you can see their headcount is actually very low. PMC, project management company, they have a lower asset base. So these companies, they have a lower asset base, they lower depreciation. Normally, they would enjoy better margins, up to double-digit margins, or close to double-digit margins. And some special cases, okay, like Kerjaya Prospect, due to their involvement in higher valuation. So basically, property developer, okay. We talk about the valuation. Their margins is normally also higher. So property developers' margin normally is anywhere between 15 to 20. And construction companies, we are talking anywhere between 2 to 5%. So when a company that is under the categorization of construction company, make sure to look into their quarterly report, see whether they have other businesses that have a higher margin. So you see normal 2.2 to 5%. When you see a 10% margin construction company, definitely you get interested and excited. But again, make sure to double check if they have other higher margin business in their books, right? And another very interesting company that just got listed exactly in 2023 January, Westland Berhad. I think due to their model is a bit different. They're doing design build. So what does design build means? So basically, normally how it works is that there is someone who draws the design for the developer. The developer will, okay, this design is okay. Then it will pass on to the contractor. Contractor go and build. But Westland, they do something what we call value engineering. They try to look at the design, or they do the design themselves at all, and they submit back to the developer with the hope of reducing their costs. So maybe the whole setup of the structure doesn't need so much, let's say, steel bar, right? Then they could say, okay, I have you save the steel bar, but I demand a higher margin. So if you look at the recent performance of Westland, I think their margins are pretty good. So these are some of the companies, interesting cases, and I wouldn't say abnormal, but interesting cases that that are not standing at 2 to 5% margin. Okay, so back to our discussion, cyclical basis. Yes, the share price and also the sentiment is always susceptible to the news, and also the sentiment, and also the general markets and share price performance of other industry as well. But fundamentally speaking, if you look at the companies that we have a discussion just now, I think they perform generally quite well over the past years, despite, let's say, COVID-19 that is impacting them. Okay, so the conclusion for the landscape of construction types is that you need to understand what they are doing. Are they doing piling? Are they doing project management? Are they doing construction plus property development? Are they doing M&E? Are they someone special like Gosrex? It's construction / technology. They are doing what we call the layman term. They check whether the piling is it good enough, right? Coming from a layman term, sorry, I forgot the geotechnical specialist. That's the more technical term on it. So try to look into more construction companies that you have a deeper understanding why their margin better, right? So why is margin important? Imagine you investing in a company with, let's say, 3% margin. When there's a increase in terms of the raw material prices, let's say 3%, what if their client refuses to accept the transfer of price, right? I'm a private property developer. I give you this contract, and now the steel prices increase. You are looking to me to discuss about restructuring the contract because you couldn't bear the cost, you could be in a loss, but I couldn't care less, maybe. And I say, you sign the contract, you're the one that tender this, this proposal to me. So I'm going to take this. So with 3% margin, there will be lesser margin of error itself for the construction company. Okay. So we will talk about something. Everyone look at the news, you will see that order book. Always, if you look at the headlines of some of the news, XXX company secure a substantial order book of a value of X. But in fact, what does order book means? So in very, very simpler terms, it's basically a contract that has been won by a company, and it represents the value of work that will be delivered over a period of time. Okay, for example, company A won a contract with a value of 100 million. The project will be completed within a year. So what does that mean? When the moment the project starts, in that 1 year period, it's likely that the company will recognize 100 million in revenue over a period of time. So that's what you should understand the order book is. How long the order book lasts and what is the value. But of course, it's not always proportional, like let's say 100 million, 25 million this quarter, 25 next, 25 subsequently, and 25 on the fourth quarter. No, it depends on the progress billing of the company, which progress billing is also quite complex, which let's see if we can have some time to discuss about it today. Okay, so why we as investors why is it so important for us to look at the order book? While understanding the construction projects we talked about already, infrastructure like building, they involved with Pan Borneo, involved with MRT3, involved in HSR maybe. So when they're in that kind of projects, you know that possibly their margin is not going to be too high, right? If they're in industrial, there is a possibility that the turnaround, let's say 2-story industrial building, you could understand the turnaround time would be shorter, but maybe the value is lower. Because of shorter turnaround time, the faster cash flow, the margins could be slightly higher. And when we talk about maybe residential, understand residential, it really depends on what they're doing. Are they doing the car park, the basement level, or they're doing painting? Some company, I don't think that's a painting specialist. Pure in construction center, of course, we are spray paint company that's listed, but painting in the construction industry listed alone, I don't think we have that. So understand what they actually do in the contract itself. You can look it up Bursa announcement, what they actually do. So having a rough understanding of what they do, referring back to their previous margins, then I think you can have a very rough idea of future projections on how a company could deliver their revenue, like the revenue recognition part over here, right? Okay, so why do we mention about financial health assessment when we talk about order book? Okay, so let's think a bit about the perspective of a party who awarded the contract, right? Let's say if I'm the private developer. So would you want a company with solid financial health? They have a strong capability to execute and carry out your project, or someone probably they are not so reputable, but they come to you at a lower price, but possibly problematic. Okay, most of the time for reputable developers, I don't want to discuss about smaller developers. Perhaps they have cost constraint. Then I don't know about it. Let's talk about residential property developers. Basically, to them, time is money. Time is really money. Even if they are able to sell all the properties now, again, basically, the residential market has been slowed down for a little bit now. Even if they're able to sell all the properties, but as long as the construction property the progress is slow, they might not be able to claim the money as per the requirements set by the Housing Development Act, or what we call HDA. Okay, developers, they can only claim the money paid by the home buyers when the project hit a certain milestone. For example, the foundation has been completed, or the structural frame of a construction project has been completed, or certain milestone. Let's say the infrastructure work, the road, the what we call water tanki, things like that, right? So it's very unlikely for them to handpick contractor with weaker capabilities to carry out the construction projects. So when a company, they get a contract, it's likely that the developer has already assessed their financial muster and also their historical track record. Okay, so in some way, companies that consistently win contracts, somewhat already proving their own capability. They've already done a certain level of financial health assessment for you. But there's a twist. Even though a company is able to win over big contracts, be careful on the issue of over-reliant on a single large project. Okay, imagine this. If your order book is 1 billion, but 900 million of it is reliant on one single project. Okay, I think there's one company in Malaysia that actually faces this issue. They have over billion order book, but because of one project has been delayed, the developer has some cash flow issue, so the company actually face very serious consequences and also liquidity issue, which has damaged their share price. So be careful when you assess the order book of a company. Make sure that's no over reliant on one single large project. It's best if they could dissect it. I don't think that's a perfect scenario where that's 20%, 5 projects, 20%, 20%, 20%, but at least it's not 99% or 90% on one single project itself. So be really careful because it really happens. There's one case study specifically that has this issue, and another one actually went into PN17. Or the company used to be a Powling company. Those who has been in the market long enough probably know about the company. Okay, and let's talk about the risk management. So let's say company A, they have a contract value of 300 million over a span of 3 years, but their previous projects that they received is probably smaller than that size. Let's say they only doing 10, 20 million projects. Suddenly they get a 300 million value. So there's also another risk in terms of the execution of the contract. Imagine if they couldn't execute the contract correctly, then they will be faced by serious consequences, material litigation. Basically, they got sued and also things like that. So be sure to have a risk assessment over to the order book that they receive for the company. Okay, and I think generally speaking, the accounting for the construction industry is very, very complex. This is not from me, from some accountant that I know personally. It's really complex. I don't think we have enough information to assess that. Okay, especially where this is another technical term that I hope to share today, progress billing. It's similar to what we mentioned about HDA, Housing Development Act. Basically, construction companies, they could claim the developer based on their work progress in place. Okay, for example, like the 300 million project we mentioned just now, if you complete 30% this year, probably you can get around 90 million, right? It depends on the progress that up to which level you're in. If you delay, you'll be faced by LID, liquidated ascertained damage LID. Then the recognition of the order book itself, although when you see initially it's 3 years, if they delay, so probably their revenue recognition could be 4 years. So it will be diluted. So each year, their revenue might not as high as what you expect. But vice versa, if the construction company is so capable that they finish the project before the timeline, let's say 300 million, expected to be 3 years, but they complete in 2 years, so 150 million for each year. So the uptick in terms of the financial performance of the company is higher. When there's a surprise in terms of fundamental performance of any company, normally it will be followed by a positive increment in share price. Okay, so I think generally speaking, the higher the order book, although it could be better for the company, but again, it will be beneficial when you go for another tender, but you could also be penalized if you couldn't handle the project. So what is the metric that order book of too much is really too much? So I would say something that around 5 times of their previous year revenue. I think, especially it's over a short period of time, I think you might have to be careful whether they have the resources to carry out, right? Especially when the construction industry, one of the most critical issues is always on the cash flow. We'll talk a bit about that. Okay. So next, how about unbilled order book? I think unbilled order book is quite simple, as the name suggests. So let's say we're talking about 300 million worth of contract for a span of 3 years. So let's say the company has delivered 80 million in the first year. What will be the remaining value? So very simple, 300 million minus 80 million. The remaining value would be 220 million. And this is what we call unbilled order book. So make sure when you study any construction company, look into the unbilled order book, as this will be the amount that would recognize over the span of the remaining years. So again, 300 million, first year recognized 80 million, so equal to 220 million to be recognized for rest of the 2 years. So be sure to keep track of the unbilled order book of the company. Okay. I think we talked a bit about not only a bit, I think we cover pretty much a lot of things here apart from cash flow management. Okay. When studying any construction companies, cash flow is one of the most important financial metric that you always refer to. So imagine this construction company, let's say company A, they are very aggressive, they are young, they're hungry, they are constantly increasing their order book. But here comes the problem. They couldn't collect payment from their clients. Okay, so what would happen in this scenario? I don't want to mention public or private. They couldn't collect. I think it's a very sensitive topic, but generally speaking, they wouldn't have a lot of problem collecting back from the public sector. But private sector, perhaps you need to look into who are their clients. Let's say if the client itself is another listed entity, but with very tight cash flow, so don't expect the company itself, the construction company you are investing in, could collect cash flow that soon, right? So what happens when you couldn't recoup your cash? Then you have to raise fund. One, it could cause a dilution in per share basis. That means that they're going for a right issue, which I think everyone here doesn't really like right issue, or nor do everyone else here like private placement, because it would dilute our shareholding. So when that happens, yes, naturally they have to do that, and your shareholdings will be diluted, which is not good. Or secondly, they would go for bank financing that would increase their gearing, and naturally financing costs for the company. Financing costs higher, lower margin for the company. So probably there will be an impact on the valuation as well, as when people see your gearing is getting higher and higher, they might be more careful. So when there is a what we call a risk discount onto the valuation, naturally it will be lower. So watch out on the cash flow management. So as a rule of thumb, I would normally refer to at least half-year cash flow or 3 quarters worth of cash flow performance of a company to see whether they are able to recollect the money, right? I think for those who do business in Malaysia, I think 90, 120 days is quite standard. Excuse me. But some cases we could go up to 180 days. So that's the reason why we look at a half-yearly basis at least, right? So 1 quarter, you do not have positive cash flow, that's fine. 2 quarters, okay, there might be some issue in recollection. Your client might have some minor issue, but 3 quarters and 4 quarters, you have a negative cash flow, then definitely be very careful with the construction company itself, right? Cash flow is very important. You don't want your shareholding get diluted, or you do not want the gearing to keep going up that could damage your profit margins, right? And this is a bit slight technical, but I hope it helps. And if you look at the balance sheet and cash flow statement of any construction companies, it's likely that you will notice that something called contract asset, contract liability. So what is this? In very layman term, understanding for me, contract asset is something that company had done, but they have not received payment. Okay, for example, I've done this part, but my client, the developer, is in the process of verifying whether the work I have done is really done, or I am just wanted to claim it. Let's say 1 or 2% is not completed yet. So then in financial recognition, when the close of a 3 period, let's say January, February, March, I received the money in April and I submit the claim on March. So there could be a negative impact short-term basis on my cash flow statement, and it would be a contract asset. Then contract liability, I think it's terbalik. So it's an advance payment by your client on work that has yet to be done. Normally that would not happen in the construction sector, perhaps in other sector, like say manufacturing sector, where your client have a deposit 30% to you, then there could be a contract liability, right? That will result in an inflow of cash to your cash flow statement, but normally construction sector will see contract assets instead. Okay, so over the long term, be very careful on whether the company is generating positive operating cash flow and are they proportionate to their profit before tax level. When I mention proportionate, it could be anywhere 50 to 70%. I think that's the bare minimum that I can accept. Okay, and next, I think we are into the tender book. So generally speaking, in the construction industry, we have two types of way that a company could receive a contract. The first one being directly award. Let's say company A has been working with company B for past 20 years. So let's say company A is the developer, company B is the contractor. So today, the developer had a new project, has a new land bank, they are going to launch a new residential project. So they straight away award the project to company B itself. That could happen in private sector, but rarely happen in the public sector. So the second one would be the public tender. So let's say ABCDE, you all submit your own proposal to me, and I will assess which proposal is the best in terms of economic terms back to me, right? If you do not assess the other options, let's say the direct award, it's normally risky because there might be better options in the market. But you know, privately, Malaysia is also a very relationship-based country, I would say. So sometimes it would not go through a public tender, but normally it wouldn't be too big of an issue because obviously a developer, they want their margin as well, right? Unless it's RPT, related party transaction. So that's a bit of conflict of interest that you need to assess, right? So tender book. Tender book, I submit my tender, okay? I propose to get a new project from the market. So let's say if I have a tender book of, let's say 1 billion. So how do you assess that? Let's say you are looking into company A. Company A is telling you, our tender book is 1 billion. Now, the way you measure is normally on historical win rate. On a very ballpark basis, is normally 30 to 40%, unless there's exceptional basis or there is a previous lumpy size project that could, make the number go higher or lower. So normally you need to calculate the tender book times the success rate. Let's say 1 billion, previously their success rate is somewhere around 30%. So the pipeline of projects that could come into the company or projected future order book could be around 300 million plus minus. So you know that at least the company is continuously doing something. They wouldn't be, let's say 500 million to be completed in 2024. After 2024, they have no work left. Then I wouldn't have any revenue or profit to factor into my accounts. So that's where the tender book comes in. Okay. Okay, this is a bit technical, honestly. Project specifications, the drawing and plans, like the company I mentioned just now, sometimes they submit their own design to them, and of course they site visit, but I think it's a bit too technical for us, right? So for the benefit to those who are new to the industry, so basically in Malaysia, apart from the public side, is more towards the private side. Developers, normally they would conceptualize the whole project. Then they go for land acquisition. So land acquisition could be in cash, could be on a JV basis. So let's say this developer, they discuss with the landowner, let's say the whole GDV, gross development value of the project is 1 billion. So I will give you 15% upon the completion or whatever terms they discuss. They acquire land, then they go for financing to pay for the land or pay for the early payment to the contractor and contracting. Then of course they are involved in the marketing and sales. They could do it themselves or they engage a third party. So contractor, what they do, project execution is basically the most crucial part in terms of whatever there are the things over here. So quality control, one of the big thing, I think quality control could really impact the reputation of the developer. Sometimes we always say that ex-developer, their workmanship is not so good, but sometimes it's the issue of the contractor that they pick. Okay, so quality control, it would lies, the responsibility is also on the developer itself as well, right? I think that would be the very brief understanding of the construction industry in Malaysia. I try to cover some of the more rarely mentioned things that I see in the market. So hopefully that helps you. And let me share a bit of extra things here before I move into the Q&A part. So a lot of you here might think, how do we really study? How do we really start to get the information of any construction companies? I think a really good way, if you do not have a lot of time, to study analyst report, where licensed analysts, they would normally have access to the management of the company. So they are able to capture the latest order book, tender book. Maybe if there is a forecast, then there's a forecast of the company. They will also tell you what's the gearing of the company, what's the risk associated with them. Let's say failure to carry out a project or increase in terms of the interest rate could impact the margins, things like that. So it would speed up your process of studying any company. Or you can go the long way, which give you a deeper understanding. That is to go through their annual report. If the company is newly listed, best is to go through their prospectus. Okay, and generally speaking, construction industry, past performance is okay. For any other industry, I think yes, it's an important indicator, but might not be as significant as we are always looking forward in terms of construction industry. That's remember we mentioned about order book just now. So it's more important to understand, number one, what is the future pipeline of projects that you get? Number two, how quick they can recognize it. Number three, can they carry out the projects based on the resources they have? Whether the contract size they receive is realistic. Again, so again, trick question: should you hold any construction companies over the long term, or should you trade it? I don't think I'm licensed for investment advice, but coming from personal experience, I think seasoned traders could definitely benefit from the volatility of the construction sector. And over the long term, if you really want to invest in any construction companies, I think companies that give you a good dividend yield and consistently having a stable increase of order book and their ability to carry out is not an issue. One way to measure is that they do not receive any material litigation or LAD before. That's a very, very good, I would say, green light on the company. No LAD, no material litigation, strong cash flow, strong dividend yield. These are the things that I would look for if I were to hold for the long term. Otherwise, if you are just, if you're looking at a company without dividend yield, construction company without dividend yield, basically you're still looking for capital gain. And it is not easy for any investor to time the entry and exit because it's very volatile based on news. It's very sensitive. Okay, so with that, I think I'll leave the remaining of the time for the Q&A session. I'll pass it back to you, Shane.
Thank you so much, Max, for doing a wonderful session on the basics of the construction sector. So if you have any question to ask our speaker today, Max, please write your question in the Q&A box, okay? Don't write them in the chat box, write them in the Q&A box. The first question by Mingni is that generally, what is the healthy margin for contractors?
Okay, I give you an answer that you'll not be happy, but the higher the better. Okay, jokes aside, I think double digit is very healthy for contractor, but it's not really easily achievable. But I think 8% is quite good as well. 8%, consistently 8 to 9%. That is one of the better, okay, I wouldn't say better, I would say a more preferred profit margin that I would look for when I'm looking at any construction companies overall.
All right, thank you so much, Max. Just to seek clarification, contract asset is work done but not yet built, right?
I wouldn't say, okay, it's really technical for us to say whether it's built or not, but for our understanding, just think of it as something that the company has done, but they haven't received the cash yet. Okay, so they could receive the cash, let's say if it's in current asset, so probably in the next 12 months, they could convert it into cash flow, hopefully, fingers crossed. So it'd be easier to understand it that way.
Okay. The next question is by Faisal. How do we screen for a good fundamental construction company?
Okay, when we talking about screen, I presume you are using some particular tools. If the tool allow, try to screen for 3 years continuously revenue growth and profit after tax growth. I know the earnings and recognition of revenue and profit for construction company is not that stable, but perhaps you could screen whether they have at least, you could put 1%. That means that at least the company, you see over the past years, we're talking about 2023, 2022, and 2021. If a company is still able to have a positive growth over the past 3 years, definitely something special about this company. The management is doing a fantastic job. So that gives you a very good indicator. But if not, you have to do it a tough way. First way is to remove the companies with negative PE. I'm not saying they're not good, but if you're looking at a solid and more stable company, probably you want to look for company with more consistent profitability. That means that they do not have losses or they do not have impairment overall. So they wouldn't have negative PE. I think once you remove the negative PE part, there will be left with much better candidates. So next up, try to look for the companies with better profit margin. I think that's also screenable. Generally speaking, 5% and above consistently over the past 3 to 5 years, that's something desirable. And if the company is just got listed and you couldn't find the statistics, you can look into their prospectus, but make sure to adjust off the one-off items, because property and not property, construction industry, sometimes they have some one-off item. So be sure to adjust that as well.
The next question is by Lucas. Is unbilled order book more important than the order book?
I think they are equally important, but talking about calculating the future revenue and profit for the company, unbilled order book is definitely more important. Order book, sometimes we are measuring whether the company hit their internal target. Let's say company A, they have an internal target of getting 1 billion worth of contracts in this year. So looking at their order book secure in this year specifically can really tell that whether the management delivered what they promised, or they're just writing it for fun or for it to look good in the annual report. So order book is also important, but recognition of revenue and also forecasting their upcoming financial performance, probably unbilled order book is more important in that sense. Yeah.
The next question is by Maslan. Usually, how long is a cycle for the construction sector?
I'm not sure by the meaning of cycle, you mean the share price cycle or the fundamental performance of the company? So if you really want to have a correlation, you can look into the economy, GDP growth, or that's okay, both. So let's talk about the overall financial performance of the company. I think if you want to take a very macro view, try to look at the overall GDP growth and also the whether there's a recession, there's a boom in the market. So you get a rough idea whether it's an upcycle or it's a down cycle of the economy itself. But I think that it's more relatable to sentiment and share price. But fundamentally speaking, cyclical wise for the construction company, it is better for you to look on more micro level, to look at the order book of the company itself. Why? Let's say if the construction industry as a whole is going down, but there's this company that's continuously securing projects. Of course, you need to assess later on whether the margins are making sense or not. If they're able to get more contracts, but the margins are lower than what they previously done, it's just to cover their costs, then this company definitely previously they're doing around 2 to 3% margin. And with the tougher contracts coming in, it's very easy for them to get into losses. So that's a tricky part as well. But fundamentally speaking, cyclical for the construction companies ultimately also relies on their order book, also tender book. So I think that's the answer that I could give you.
Thank you so much, Max. The next question is by Matthew. Do you have any example of company with great order book?
I think that's plenty. I try not to mention any specific stocks over the session. I think one of our friends here already mentioned the company name. So if you want to locate the companies with a great order book, I think what I can say is try to look for order book in proportionate to their revenue instead of looking at the sheer size of the order book. Let's say 1 billion sounds big, but what if the company has been doing 2 billion in revenue for the past year? So that's not really huge for the company. But if a company is doing 300 million in revenue, but they have an order book of 1 billion, that pretty much secure their next 3 years worth of revenue already. Okay, normally that would be the case. So for the next 3 years, at least each year they could deliver around 300 something thousand into their books. So that I would consider the great order book around 3 times. But anything around 5 times, I would more than 5 times, I would be more conservative and really look into the contracts, whether they have did they just raise fund to complete the project, or it's a mega size project, or this is a project that they could sub it out to other subcontractor. So, or the tender is very long. Let's say it's 10 billion, but over the period of 10 years. So it's very subjective in that basis.
All right. The next question is by Abdul Awang. What is your opinion on issues like labor shortage and also high material costs right now?
I think labor shortage has pretty much been resolved. I don't hear contractors shouting about as the freeze of headcount and also the initiatives by some of the agency pekerjaan to actually sort of like refurbish people who are illegal now. Previously they are illegal to work in Malaysia. Now going through some particular agency pekerjaan, now they can work in Malaysia legally. And then, so they also stopped the, I wouldn't say the use of meaning of the word import, but getting more foreign laborers into Malaysia, that also helps for the construction industry. So the situation has actually less worse than 1 or 2 years back then. Okay. And in terms of raw material prices, if you look at the commodity prices, generally speaking, right, as already not as significant as what we see previously. Okay. Except for cement, as I mentioned just now, except for cement. Cement prices, I don't think it's coming down. But for steel and other things, yes, recently it's coming back up a bit. But I think it's normalizing and it's much better than the peak times of COVID. It's normalizing already. So again, if you think of the companies that's just secure contracts in earlier of the year, okay, and they are having a lower cost of material at this moment of time, so definitely they could deliver better margins. So hopefully, material prices wouldn't go up that much in the near future. So to answer your question, labor shortage, I don't think it's much of an issue for construction industry. High material costs actually has been normalized in this year, especially starting from Q2.
Thank you so much, Max. The next question is from Faisal Ahmad. Does Gamuda get order book from China worth 30 billion?
I'm not sure if you're referring to the specific prime land in Vietnam. That I think is okay. Let me double check on that and come back to you. But I don't think the 30B is denominated in Ringgit Malaysia, right? I think if you Google Gamuda and then you put in 30B contract secure, then you probably could see it. But whether it's in Ringgit or not, I think I really have to double check on that.
All right. The next question is by Ming Ni. What do you think about the industrial or warehouses subsector? Will there be an overhang position with the rapid growth in these few years?
For now, probably not. But when you see more and more Okay, normally this will be my indicator. The moment when I see a lot of contractors, they are announcing that, okay, we are venturing into warehouses, or a lot of developers, they are diversifying their business to venture into warehouses, then that is a red flag for me. Normally that I would think that the overhang is not far away, probably 1 or 2 years, or oversupply would happen soon. But for now, I think the situation is still okay. There are not a lot of players that have the capabilities, and also the industrial players, they are also very careful selection on the brand names. So let's say residential developer wants to move into building industrial park. It's not easy. So who will be the buyer? Who will give you the LI, letter of intention, to say that, okay, I'm going to take 1, 2, 3 plot of land for my property? If you do not have the track record, it's going to be tough unless you're going to go into a joint venture with a reputable player or the government itself. Let's say joint venture with Guilin State Government or something like that, and you were to build for semiconductor or solar specifically, then it will be easier to carry out in that sense. For now, I think it's still okay.
All right. The next question is by Cairo Anam. Will oil price spike affect the building material cost in the near term?
Right. I think, yes, indeed, the oil price has been moving up again lately. So far, the prices, if you guys want, you can actually monitor a couple of things. I think first thing is the aluminium, steel, cement. You can look at the financial performance or the analyst report for, there are only 2 or 3 companies in Malaysia that are doing cement. So you look at the financial performance, if they are doing super well, then you know the prices has gone up. But if I look at the steel rebar prices now, I think it's slightly higher. It's slightly higher than the lowest point in around May this year or November last year. But I think it's still on a more controlled manner so far.
All right. Let's do one last question by Lucas. What are your thoughts on developers venturing overseas? Are they usually successful?
Okay, I think I know which company Lucas is referring to. It should be a new company that just got listed not too long ago, but we try not to mention any names. Okay. Venturing into, sorry, the question is developer, right?
Yeah, nothing to do with construction company.
Okay, no worries. Developer. So whether they will be successful. So you need to look at the whole process of developing a project. First, you need to get government approval, whether they are familiar with the country itself. So for a listed entity to venture into some other country, I'm sure they already done their homework. They already found their partner. If they couldn't own 100% of the entity over at the foreign country, they surely have already found a partner. Secondly, whether the land laws over there is beneficial for them. For example, if we're talking about Vietnam probably you see a lot of news that the China company got the non so polite word will be slaughtered because of the price crash. But if you are venturing into that market at this timing, when the other property companies are getting slaughtered, are you getting cheaper land bank? That's the question. So what kind of timing are you venturing into that country itself? Okay. So thirdly, I think it's also important to look at, let's say you're looking into US, not Vietnam, not Indonesia, let's say Thailand. Look at the financial performance recently for some of the Thailand developers, whether they're doing well or they are actually suffering. If they're suffering, then it's probably not that easy for the company that goes in at this moment as well. So it's going to be tough for them as well. Imagine local player has some issues on selling their properties. So a foreign player coming in, you have to deal with marketing, sales and marketing. You have to deal with the, the local, what do we call? All this, you have to deal with how people interact with each other over there. It's not that easy, and how business work and how discussions happen over there, right? So marketing and sales, and also most importantly, local contractor. Who are you going to engage, or you're going to bring in your experienced contractor from your home country, or you have partners over there? Who are the partners? So there are lots of factors to consider. I would say that for us, of course, a lot of moving parts we couldn't assess, right? So 2 things that we can assess. Number 1, historical track record of the company, whether they're doing well in their home country or home country is not doing so well, so they're expanding into other countries to increase revenue stream. Number two, assess the property developers over at the country that you're looking into. If it's in US, look at the US performing US companies how are their performance. If you're in Vietnam, look at their performance is in Thailand, sorry. Annual report might not be in English. If it's yes, then lucky for you. So have a look on how the developers are doing, and I think you have a pretty good measurement on it.
Thank you so much, Max, for doing this session for us, the basics of the construction sector. So hope all of you here have gained enormous value learning from Max about this sector. So if you like the session, maybe you can type 2 in the chat box and let me know, all right, if you like the session.
Okay, I would like to take the time to thank Shane and thank everyone for staying out while we are in 10 p.m. So thank you everyone for staying in so late, and I sincerely hope that the session helped you guys in understanding the construction companies.
Yep, so ladies and gentlemen, you just heard from the founder of One2Invest, Mr. Max Tan.
Thank you.